Good morning, everybody. Happy Monday. A little bit of a break there from me, some travels, but I'm back and wanted to share some updates on some Bitcoin research, where we could go, and sort of a whole enchilada picture where we compare Bitcoin with the rest of the money in the world. So let's get right to it. I want to start where we left last time. Okay. So here we have the old power curve, going from the top percentiles here, the 90th to the 100th. Still, I'm a little bit delayed on the price. This is as of yesterday, 106,000. Obviously, we've been popping up recently as of this recording, but it's fun times, right? We're now pulling this line up. Okay, so as long as we're above the black line on a daily close, we pull it up, which is very exciting, very fun, and it's definitely a minority of the time where price is above the black line, but that's just how it is. If it was 100% R squared and we just followed this black line perfectly, we'd always be on it. But that's just not the way the world works. So let's, it's been a couple weeks now since my last video. Let's see where we can possibly get by the end of this year, if we presume that we're going to have a pump, the 4-year pump. Let's take away the 100th percentile, the 99th, 98th, 97th. Under 3x, I think, is a good target. That is 3x the trend. Okay, so here, I know my tooltip is in the way, but as you can see in 2021, all right, I'm going to put the tooltip up. 2021, that top for, a couple months, all right, from February to March, we're at $45,000 Bitcoin here. We're starting to be above the 90th percentile. Even from January to May. All right, then we fall down quickly after May. But that was the first top, all right, above the 90th percentile. And then we look at the second top, only a couple weeks, I guess. Something like here, October to November month, we're above the 90th at a $60,000 price, but we were going back down. Okay, we're above the 90th, which is $60,000. I think there's no reason why something like that couldn't repeat. Again, you know me, I'm not a hyper Bitcoinizer, even though that would be just fine with me if that happens. Never sell all your Bitcoin. Not financial advice, but I do think that's would be the risky play. But I do see something like these bands, again, indicating the top, which represents something like 2 to 3 times the trend. Okay, the lower, the lowest band here, the 0, you can't even see the numbers on my tooltip, but the purplish band is 90th percentile, all right, which is still, very rare air above the trend. 2x the trend, all right, so that means with the trend 100,000, 90th percentile, 2x is going to be 200,000, up to nearly 3x. 2.8x is the 96th percentile. That would get you to 280,000. So let's take it till the end of the year. 2025, $250,000 to $350,000 Bitcoin. I think that's in play. I think it's in play. I think we're going to experience many months above the trend line now, which is where it gets fun. It gets fun if you've been in it for a while. Okay, so that's where we are. That's the power curve. I want to do an update on what the percentage returns mean for the power curve. Okay, so I've shown this a lot. All right, here's the old power curve on the price, the same thing. This one's going out to 2030. All right, same trend line. Let's look at if you held till today. All right, and when I say today, I mean latest value, which is going to be 18 May, $106,000 Bitcoin. Let's look at if you had held till today and bought at any time in Bitcoin's past, okay? So it's actual compound growth rate, right? What you can see is the trend is it's an inverse of the trend line, right? So if you bought at a penny back in June 2010, congratulations. That translates into not only many billions of dollars or hundreds of millions of dollars at least, but 198% per year compounded. That's what that means. But as you buy at higher prices, the return goes down. Now you'll notice it gets kind of wacky here within the last 2 or 3 years. That's just the nature of the math. All right, obviously you could really get a good return if you're buying at this well under trend value of, $16,000, $17,000 for Bitcoin. Again, when Peter Zion said it was $17,000 overvalued on Joe Rogan. Obviously, completely and absolutely wrong. He has no idea what he's talking about. You get 100% return, not just gross, but per year. What I'm showing you here is the compound growth return. Okay. But as we can see, this is not at all like the stock market because there's a definite trend line happening here. Okay. And if we would draw that trend line, it's going to look like the inverse of the power curve itself. There it is. All right. So you can still make plenty of money on Bitcoin buying the lows, selling the tops, or shorting the tops, if you will, if you choose to do. That's a much more dangerous game. Plenty of opportunity for outsized gains. And really, if you look at the trend line, which is the smooth line, the trend line of the returns all the way till today, we're still running at a 42.3% compounding, 42.4% compounding performance for Bitcoin right now. Okay. And as I've said many times, you'd have to go out 100 years to where you buy today. And since that the slope of these returns do slow over time, if you bought Bitcoin today at 106,000 or whatever it is at the moment, and held for something like 100 years, then you would get something like a 10% return. But until then, you're still way over any return that the stock market or the bond market can get you. Although, admittedly, it will fall. It will fall in percentage terms, but the value, of course, of your holdings is still going up big in dollar terms. But this is how it will fall. Want to correct maybe a little confusion. I saw Fred Krueger mention this. It's probably a misspeak on my part. These are the evolution of the returns as we go throughout time. Okay, so again, you held Bitcoin here from June 2011 till today. You made 79%, right? If you actually bought it at $30, but if somehow you bought it at the trendline price, which was $1.66, you made 120%. Okay, that's how this chart works, and it just evolves around going till today. And then conversely, moving forward, if you buy it today, what would your return be based on the trendline price going forward? And you see this just gently declining percentage. It might seem like it's declining fast, but it's not really. It's you could hold for 100 years and still have a 10% return, which is obviously going to be better than or at least equal to the stock market, let's say, based on the last 100 years of stock market returns. Okay, but that is different than saying what will the trailing 12-month growth be of Bitcoin and the Bitcoin trend line. All right, so that is here. It's different. So let's take off the trend. Let's take off the regression. You've probably seen this on other charts or whatever. This is just, I'm capping this. This is on the right-hand side. I'm capping this as 2,000%. Okay, 2,000% is the max return. Okay, so for more, you'd have to find it in the tooltip. Obviously, the trailing 12-month here in December 2013, when we were rising to, over $1,000 per Bitcoin, was, as you see here at this date, Where's I at the 6,000? January 4th. If you held till January, if you bought on January 6th, 2013 and held till January 6th, 2014, you got a 6,658% return off the chart. Very good return. Okay. These are trailing 12-month returns. Now, this is a totally different picture, right? It's a totally different picture than thinking about the long-term holdings compounded. With this picture, it does not, it doesn't look the same, as you can see. And when I go off the chart to the downside, by the way, it's a negative. Okay, so it's a trailing 12-month loss. All right, so if you bought here in, I don't know, June 2014, $600. All right, and then you held until now. I got to go to June 2015. Oops, here, somewhere like there. You lost 60%. Okay, because Bitcoin was $600, then $229 June 2015. Of course, you don't need to sell. That's just the calculation. Question is, where could these returns go, and what's the trend line of these returns? Okay. Well, for the trend line, again, let's look at the power trend. It's just the trend of the price. Let's leave on the trailing 12-month. Let's put the trend line on these returns. Now, this is where you can see really the astronomical gains for Bitcoin, or when you bought in 2000, let's say earlier than 2013, obviously. Right? If you were buying in 2012, you're buying at single-digit Bitcoin. Doesn't really matter where, on the trend line or actual. Actual is green. These are huge percentages, well over 1,000%, sometimes 20,000% year on year. Long term, again, it's this. Looks like something like 200%, which is an enormous astronomical return if you think about it compounded year on year, year on year. But just as a trailing 12-month feature, these were the golden days. But we still get this trend line. Okay, so now I'm going to take off the actual, which is the green spikes. We still have this trend line. So just to be clear, when will this trailing 12-month on the trend line reach 10%? That sort of mythical 10% number, which is about, the stock market, or maybe the stock market without reinvesting dividends. It's probably even more than that right now if you have the stock market return. Certainly since the last 15 years, if you bought it S&P 500 at 666 in March 2009, you're way up now and way over even a 10% return. But let's just say 10% return. When will the slope of the Bitcoin price trend get to 10%? On a trailing 12-month basis? That's faster than 100 years. It's about 2070. Let me check, just to double check, because I don't have it on the... It's about 2070. Let me find the exact number. Yeah, falling below 20% is, right at 2070. So somewhere in the 10% range, could be in around 2065 or something, but falling below 10%, we still have 45 years. So even though this thing looks like it's going down pretty quickly to 10%, which it's not necessarily if you look at this hard, right? Because out to 2030, you're still at 30% trailing 12-month return on the trend line. This will get to 10% in the year 2070. So that was, I think, the confusion. Sometimes I was talking about holding the compound growth from today. It will fall over time, which is different. Remember, this is a different concept than an exponential return. Because with a bond, right, or if you own a bond or you lend someone money, you quote in constant returns. Exponential returns, which is a straight line on log scale return, 5% per year interest rate or 10% per year return. That's what someone would expect as an investor. Bitcoin doesn't do that. It actually does decline in the expected return, but the expected return is still so enormous that it's still worthwhile. But this is the nature of the curve. This is the nature of the network. So we look at the trailing 12-month. You see it's much steeper, right? So you have a nice, more gradual fall if you just look at holding for a longer time, right? And then holding out in the future for a longer time. But if you want to look at those trailing 12-month, just simple returns, which are these huge mountains, right? 2017, we got a trailing 12-month price of 2,000% more. I can't even find it exactly. Yeah, 2,000, something like 2,000%. I'm off the chart here. 2,400%. I think that was the top. December 16th. 2,400%. The regression trend line was still only only 98% there. But those real amazing returns as a trailing 12-month basis stopped, from 2013. Still great returns, obviously, if you got in as they called the crypto winter here. And even a great trailing 12-month return here in March 2021. 1,000% per year. 1,000% per year. So, by the way, if we assume $100,000 Bitcoin, which was the price as we went into 2025, hold a year to 2026, what would that trailing 12-month percentage return be? Maybe only 300%, 200%, 200 to 300%. So we see these peaks, these mountains have obviously fallen as the system has matured. All right, so again, this further illustrates the power growth. Stock market returns wouldn't look like that. You'd have 20% returns up, 30% returns down. You might have 30% returns up, 20% returns down, whatever, but you're hovering around the 10% all the time. It's different for Bitcoin. Bitcoin is being adopted. It's a technology. It's a network that we're still trying to figure out. So as it gets heavier, as it gets more users, more nodes, the returns, you would expect the returns to fall, and they do. They do. But we still got plenty of time. That's the bottom line of this chart. We still have 45 years till about 2070, until the trailing 12-month return on the trend line hits 10% per year. And you'd have 100 years if that compound growth, if you bought at 100,000, if you bought one Bitcoin today at 100,000 or 0.1 Bitcoin at 10,000, you'd have 100 years of holding it until you'd have to worry about that compound growth slipping below 10%. So it's two different concepts to think about when we talk about the return. Okay, next one. This one is a fun one. I'll put this on log on the left. This is a lot of research now. I do the monetary base updates, and I do these power trend updates. I started both of these in around 2018. Okay, and the power trend sort of solidified in 2016. That's when it was clear that it had predictive power in 2016. But the power trend, as we know, is not a straight line. It's this concave, beautiful, slowly, asymptotically declining trend line. It's just the nature of how the network grows. That's not the case with other money in the world. So what's this other money? It's base money. That is all the central bank money. At the moment, that's about 25 trillion. Back in 2008, it was something like 6 trillion or 7 trillion. Gold is on top of that. But anyway, I'm adding them together now. So we have base money plus available gold and silver. All right. We're getting close to $20 trillion in available gold and silver. 19 trillion for gold and $1 trillion for silver, something like that. And then, since one of these is an asset that is gold and silver, and then one is a liability, that is central bank money, because central banks just create the liability ex nihilo. They can buy whatever they want. It can be gold, and sometimes it is gold, but mostly it's government bonds. We can add these numbers, but we gotta remove the overlap. So the overlap, of course, is whatever they hold in gold, and also Bitcoin, because they do hold some Bitcoin now. It's very small. It's only about 500,000 Bitcoins. Governments hold globally. That's $50 billion equivalent at the moment. They hold much more gold, and especially because the gold price has gone gangbusters, and amidst a lot of the government uncertainty in our current times, it's about $4 trillion in gold that's held by governments worldwide. Over 1 billion ounces of gold. Okay, getting close to $4 trillion in value. So we'd have to subtract that off because that's already included in the available gold and silver price, but it's also backed by the monetary base, so we don't want to double count that. There's a little bit of an overlap, so you have to subtract that out. Then you'll get to this idea of world basic money that is not Bitcoin. That's your real Bitcoin dominance index. That's what Bitcoin's competing against. Bitcoin's not competing against Ethereum or Stellar or Ripple. It's competing against fiat-based money, the monetary base, and gold and silver. So I got it all in one chart now. And again, the relationship, the trend of all of those typical TradFi monetary instruments is exponential. Exponential is a straight line on log scale. So I got the actual values here, and then I just convert it right into the trend line value. Very simple. Okay. The actual value, it's as of April, is 42 trillion. Trend line 44. Not far off. Okay. There's your fiat money. Now let's look at Bitcoin. Okay. Interesting. Look how that fiat money is way higher. All right. So it goes into this interesting, almost completely looking straight line. Okay, because it's so far away from Bitcoin. Let's take off the fiat-based money for a second just to see. We go, this is market cap now with Bitcoin. That's the comparable unit for unit item. Bitcoin went from nothing, scaled from nothing to now about a $2 trillion asset. Right? This is of April 2025. The trend line is 2.4. It's actually, I could refine this a little bit. This is just very simple. This is on the monthly points. It's slightly different on the market cap of if you looked at the daily market cap, but it's not a big deal for the moment. So we're just going into the actual values of Bitcoin versus the expected values. That is the trend line values. Okay. Hello, Tamam. Thank you. I have not disappeared. Moscow has not gotten me. They will never. And thank you. Thank you for the welcome. So this is in my opinion what it comes down to. If we talk about hyper Bitcoinization or what it could mean when Bitcoin gets adopted worldwide, I think it's going to look something like this. We got Bitcoin, which is a power relationship of the network, and we got fiat money, which is an exponential relationship. What's the percentage difference? Get this line right here. Okay. At the moment, April 2025, Bitcoin has a 4.4% penetration. It's even higher because, as we know, we're over 2 trillion in market cap at the moment, but let's just call it from April. From May, end of May, in this exhibit, we're now on the trend line. It's not going to be exactly the same, but we're on the trend line. It's 5.6. And as we know, we're moving above trend now. As I just said, it was fun times. We're going to be pulling the trend even back higher for Bitcoin than it's been in the last 3 years. So let's pull it out. Let's see where these two meet. Somewhere, interestingly, around this mythical $100 trillion. So it's almost a self-fulfilling prophecy. As you know, I'm not a fan of the stock to flow model. It's been changed a lot, and it has not had predictive power like the power model has had. Also, the thinking behind 100 trillion has to do with the current financial system, which is broad money, is somewhere, and it's over 100 trillion at the moment. Broad money, that it's up to M2, which is not even including M3, so it's a bit over 100 trillion at the moment. But as I've said many times, Bitcoin is comparable to base money. So that's you got to look at gold, you got to look at the central bank money. That's really what Bitcoin UTXOs are comparable to, and this is where I think they'll meet. Do I think it's going to be exactly May 2038? No. And I'm going to actually refine this a little bit more. This will change, but it's just a rough idea. Give you a rough idea here. I think two or three halvings is the picture. I've said this for a while now, but now I kind of have it graphically where I think this makes good sense. But 10 to 15 years. And if you're wondering what the price of Bitcoin is at this point, it's $1.5 million to $2 million. That's going to get you there. And notice, when I say that Bitcoin would then be 100% of other money, that doesn't necessarily mean that Bitcoin is backing all that other money, right? Because obviously gold is included. Bitcoin can't back gold. It can sit alongside gold. So really what this is saying is 50-50. So a lot can happen here. The levers can be pulled in different ways. No one can predict the future, but it is interesting that this sort of mythical 100 trillion might actually be the one where they sort of cross. So I don't think hyper-Bitcoinization is the model. I don't think hyper-Bitcoinization is the thesis. I think it's just slow and steady churn. The Bitcoin network on a power relationship. The rest of the world continues on this typical compounding, constant exponential growth, which looks like the green line. And without any of these things, the slope is not a little bit stronger, I guess we should say. Much flatter if we look at it here. And Bitcoin grows much quicker. And then from here on out, I think it's just philosophical. No one knows what the monetary system will look like, how much control a central bank might have, if we really even have faith in central banks anymore. Governments can still issue bonds. You can still have a fiat world. But if Bitcoin is like the most scarce, supreme asset, risk-free asset, governments won't be able to buy those bonds ex nihilo with central bank money. All of that is possible. And I don't even think any of this, these values don't matter. We get to $1 quadrillion of Bitcoin by 2050. Interesting, but it obviously doesn't matter. The amazing thing is the power relationship and how fast it takes us to par value, let's say, with other world money. So that's all I got, guys, for today. Let me know if you want me to show you any other charts. I'll keep coming back to this and refining this number. Like I said, this trend line here is very rough. It's based on only these monthly figures, which is... The daily market cap will be different. And actually what I need to do is the trend line of the price times the expected Bitcoin, because we know that as well. So I got to tweak this a little bit. Might be a little bit longer, might be a little bit shorter than 13 years. But let's call it 10 to 15 years. I think that's how long it's going to take to get to match the historical financial system of all time. It's the greatest performing asset in the history of the world. We can see it in real time. That's why it's so amazing. And I think we're going to be very close within 10 years. Things are dicey. So, Mom, thanks for the message again. But it plays into Bitcoin, right? All the uncertainty in Ukraine, in the Middle East, in Asia, obviously plays into all this stuff. I was just talking to Danny on what Bitcoin did. That we have to keep in mind how many foreigners will own U.S. treasuries in the future, and that number is declining as well. Doesn't mean it goes to zero, but they have the power to dump treasuries, and that also will affect this. But I think it's much less of a feature of how Bitcoin grows compared to just the power curve, right? Like all my research from 2018 points to $100 trillion base money value 10 years from now, 12 years from now. But that's actually the sideshow to the power growth. I think what purchasing power is a part of it. Of course, Bitcoin is a purchasing power preserver. It is sovereign money. It's freedom money. But I still think that is all a sideshow to what's really happening. It's just a network being adopted. That thesis is more and more coming home to me here. I just don't think it really matters as much, like how much money is in gold versus how much money is in backing, fiat money. It's a part of the story, but really what you're looking at with this beautiful, gently sloping power curve of Bitcoin is just it's a network that's popular, that's been tested and vetted, and this is how networks grow. They grow in this power function, which is not exponential. Yeah. Hi, Roman. I don't know. Honestly, I don't know. I think those multiples will go to zero. As we know, MicroStrategy is obviously the first one. He asked about what do we think about all these BTC treasury companies popping up. It doesn't make sense to me. It doesn't make sense. You can't just say you hold Bitcoin and then expect your company to trade 3, 4, 5 times the market value of Bitcoin. Why would anybody trust that? You don't need to trust that. But I think it's indicative of the financial system, the traditional financial system, the historical financial system. People want to give their money. It's like, take my money, shut up and take my money. People want to do that. I think historically, because that was the only way you could earn a return historically. Because when gold was tied to the dollar or the pound or the Dutch guilder, it was tied. You didn't make any money. Yeah, you could preserve your money holding gold, but you didn't make money. You had to make money by, putting your capital to work, either letting the bank lend it out and you would collect a savings deposit yield, or you yourself actively invested in your money, sweat equity, or not just sweat equity, but investing money in your business yourself. So Bitcoin is now gold, of course, as well. You can still earn passive appreciation income on your gold, and gold has been going gangbusters the last 2 years, up over $3,000 an ounce, screaming for gold. And gold is well over trend. Remember, I said fiat money is 25 trillion. The trend is like 30 trillion. Remember, we've talked about that. So fiat money is lagging. And if there's anything I know about central bankers, it's they do not, they're going to let that pendulum swing back quickly if they feel they need to act. And it's coming up time for them to act again, I think. Those interest rate costs, debt servicing costs are going to look too expensive, and they're going to want to print more. So just own Bitcoin is my long answer to your question about the companies. But I really don't know how much longer it will go. What companies are you talking about? I'm going to look at let's look at Bitcoin treasuries. Let me put it up here. Okay. So Rodolfo and the CoinKite, good people at CoinKite are tracking 200 companies. we talked about this. This is the best place, I think, to track it. Very, very good. We got MicroStrategy in the lead. Unbelievable. They're matching all governments in the world right now at 500,000 Bitcoin, right? 50 billion in value, 60 billion in value. And they trade at a 2x. So this is the figure. BlackRock, by the way, had a huge drop, right? I'm sure you guys all saw that. Something to talk about. Like, all these multiples are just insane, obviously. I mean, Tesla, obviously, if you look at something like Tesla, the value is going to be way different compared to companies that just hold Bitcoin. Obviously, there's other value in Tesla for now. It's probably companies like this. You're wondering. And they just had that was a while back. BTC per share. They went from 166 to 23 at the end of last year. Anyway. Yeah, it's exactly. I mean, all of this stuff reminds me. It's like somewhat more advanced than the old ICO days or the meme coin days or the yield farming days. But all of those things were part and parcel of the same thing. It's just like, at the end of the day, for all of those investments, you're not relying on productive capital. You're relying on speculative investment. And that's unsustainable. This is actually the one, isn't it? So they've done the cost basis. But I can't sort by that. Interesting. So if you look at the cost basis of MicroStrategy's Bitcoin, not just the NAV, but the cost basis to the value now, they have 1.5x. That's something that's more realistic, I guess. But again, this is analogous to, so this green column here, this NGU, he's calling it, number go up basis. That's, anybody could achieve that. This doesn't mean anything necessarily. It's just, I mean, it's good to see. Like this company, for example, Semler Scientific, their cost basis is exactly the same as their multiple over NAV, Bitcoin multiple. So that you could say that makes sense, right? And this one is undervalued. Next Technology Holding in China. But yeah, just hold Bitcoin and you'll get these multiples anyway. So I don't see it as a like something to chase. This has been interesting. Not diamond hands, right? I'm sure you guys have seen over the last couple of days, some funds have drastically cut back. BlackRock, I think, cut like 500,000 Bitcoin. Where is the thing? Oh, not BlackRock, but IBIT. Where's IBIT? Let me go to ETFs. So BlackRock managed IBIT. Very interesting drop here. 530,000 Bitcoins they sold. They went to an even 100,000. I don't have any inside information on that other than the pension funds wanted to take profit. Took a lot of profit. It's very interesting. And the price is still rising, right? I mean, the price didn't even miss a beat there. And you can look at it globally. Where's the... is that a bug? What's going on there? I don't know what those dots are. Anyway, Go back to the global number, and it was a big hit. From this. We can see the drop from the ETFs. They should have a total, but they don't. The ETFs dropped. It was all IBIT, basically. That's 500,000. You can see it right there. And price didn't miss a beat. Yeah, so Roman says, I think retail feels priced out. And, since maybe you can't get to one full BTC, there's probably some of that. I used to make the recommendation all the time that everyone should have one Bitcoin per family member. It's harder to do. Of course, as we know, Bitcoin can be broken up into 100 million units. So it's totally fine to have, 0.1 Bitcoin per family member or 0.01 Bitcoin per family member. You can absolutely do that and think that way and think in millibits or Satoshis or whatever. But yeah, unit bias, they say, right? That's why the next meme coin tends to survive for a little bit and compete. And it is hard to fight that. That's why companies do stock splits, basically. It's because of unit bias. So, yeah, we're way bullish as far as I can tell. Way bullish, and whether the political climate gets more uncertain, meaning central banks have to step in and print, or maybe adjacent to that is the governments try to go another way and buy more Bitcoin, right? Remember, we only have, according to Rodolfo, about 500,000 coins, which is, again, the same size of MicroStrategy. It's unbelievable. There's MicroStrategy right there. More, Saylor has more than all governments in the world put together. That's not going to last for much longer. It's very close. They're both neck and neck, about $60 billion worth of Bitcoin. But obviously that's going to be bullish for the price. So there's many ways that there's many paths that Bitcoin has to go up in value. Yeah, Roman says psychologically, investors are used to owning at least one whole share. Completely agree. And it might be the case, by the way, that we change, because of unit bias, we'll start cutting the Bitcoin price down to, whatever it is, millibits, or that's been talked about for a long time. Anyway, it could be that itself, like in the market, we start talking about a tenth of a Bitcoin or whatever it is. But still, for me, at the end of the day, I think it's about this. It's a combination of those two ideas that I've been thinking about a lot. It's like, okay, Bitcoin's going to accrete to this level at some point. Might be 100 trillion. It's all the money in the world, the gold, silver, and central bank money, all right, which is 45 trillion now, $45 trillion. But this trend line of Bitcoin is just so awesome that, in my opinion, it's more of the story. And Slanitz as well, we were talking about this. He was mentioning, can you do a dominance or like a percentage? And that is this. That is this. And I think that no one knows how to quantify this or how this will look in the future, but, very possible that within the next 5 years, you have some central banks that are have major reserves in Bitcoin. But again, that, if you talk about the ethos of the system, it's not only about number go up technology. You need to reserve it yourself. That's why I'm always talking about multi-sig, and that's why I don't even care about fractional reserve banking. This is another thing we talked about with Danny on the What Bitcoin Did show today. I'm not a fan of legislating for full reserves. Just withdraw your Bitcoin yourself and hold it. You'll make more yield just holding it than you will in any other asset. Yeah, I agree, Kevin. The metric system for Sats, and I presume when you say metric system, you don't mean like actual meters, do you? Or do you? But just measuring in Sats. Yeah. Impatience or over leverage. Talk about this one Bitcoin per family member idea. There's plenty of people that I know that did not follow that advice. Sorry, they followed the advice, right? Down when Bitcoin was a couple $1,000s a coin. Gets up to 20,000 a coin, 30,000, 40,000. You need to pare back, or they feel like they need to pare back. Yeah, I'm not trying to judge. I certainly have had my fair share of, what's the word? Seller's remorse. It's not easy. Good morning, Slonitz. I just mentioned you actually for the comparing the power curve with the exponential curve. Yeah, it's a great show. Danny's, I think, done a very good job taking over from Peter. You guys work hard. Yeah. Yeah, calling it megasats and instead of calling it millibits, it's probably right. It's a good point. I haven't actually thought about it that way. I should measure things that way. I thought about getting like a calculator up on my website to show those things. Also with the old gold, because there's a lot of interesting connections between a troy ounce and grains of gold. The dollar originally in the United States was not based on gold, but silver. It was something like 270 grains of gold, which is like 80% of an ounce, a troy ounce. So that was the actual legal definition of the dollar around the time of Thomas Jefferson. It was 80% of a troy ounce. So I thought about doing some sort of historical calculations of showing those values and then also just translating that into what that means today based on market. It's kind of interesting to see. And then Bitcoin, of course, is going to be, that's the new standard. Definitely not proprietary. Slonitz asked about the slope and intercept. For the power curve, okay, the power curve of Bitcoin. Wait a second. The power is roughly, it's a little bit less than 6. Okay, so that's, I'll give you exactly. Wait, why am I doing that? Sometimes I publish them on the chart, but it's just not. I haven't actually even on my website. Let me show you on my website, the update. So here. Yeah, still only one chart, I know. Here they are. So this will update every day. So it's 5.78. That's what I get. Again, you can be slightly different based on your data, but that's what I get, 5.78. And this is a very small decimal place to the negative 17th, 1.47. That's what I get. Oh, sorry. You might have not saw that. Might have not seen that. 5.78 on the slope. 1.47 to the negative 17th on the intercept. No problem. You can pick those up anytime. They're there. If you want to know this one, again, this is exponential, so it's a totally different function. I can tell you. Hold on. So for the exponential trend, which is interesting. Remember, for the base money, like only government money, like euros, yen, yuan, you can make the case that's even 12% is the slope of this curve. But with losing against the dollar, it actually declines to something like 10%. But then when you add gold, which actually has a slower trend line, which is interesting. But I think you should add gold because gold is part of historical base money, even though central banks only have, a fifth of it. I count all of it. The slope of this trend is only something like 7%, 7% per year. 7.3 is what I get. But the coefficients are 13.89. All right, that's the intercept. So you're at 11.5 in the actual, but if I draw the slope, it would be 13.89, and then the slope is 0.58. Sorry, 0.58% or 0.0058 actually. But that's the exponential functions. You got to plug it in that way. Yes, Slanitz, just send me an email, no problem. My email is on the website. Anything, just send me there. Info at Crypto Voices or info at Porkopolis, no problem. But this is what I think. This is in part actually to what you were asking, Slanitz. I think this is really. I don't know at which point we say Bitcoin merges with the traditional financial system. Obviously, we're not there yet. All right, the curve looks like this. Nothing's going to be as beautiful and smooth in the future as it obviously here we see what happened in the past. But it's generally on this trend line. And it's why I keep saying this trend is way stronger than what people in Argentina think about, like their purchasing power of the dollar. It's absolutely not to say that the people in Argentina don't have a legitimate reason to hold Bitcoin or hold dollars even. But those are just they're different things. They're more like the Argentina story, the Japanese yen story. That's all here. It's in this curve. And obviously for them, the slope is much steeper, especially in Argentine pesos. Even though I guess Milei is still working hard on the to get the black market rate down. At the end of the day, all that stuff, inflation, loss of purchasing power, that's represented here on this curve. And so at the end of the day, I just think it's not as important of a function. It's more of what's happening is we're adopting Bitcoin. We're using the network. We're figuring it out. People are understanding you can withdraw your coins slowly every year. Grandma hears about it at Thanksgiving or whatever. And obviously in less developed nations, people who might not celebrate Thanksgiving but do have a phone, they're getting more. It's the adoption curve that matters right now for Bitcoin. It's not really purchasing power. $13 years, 10 to 15 years. That's when I think we meet it. And to be clear, as probably most of you expect, I mean, I expect a lot of news between now and then, and you know, I guess at the end of the day, the ultimate announcement would be, you know, not just the strategic Bitcoin reserve, which has been announced, or even, you know, purchases, weekly purchases or monthly purchases, which has been, I guess, announced, although we don't know exactly how that's going to go and, you know, if they'll move some gold into Bitcoin or whatever. But if the US government itself starts to take Bitcoin from taxpayers, you know, that's not happening tomorrow, I don't think, and they don't. That would scare people. The Democrats would say that's dangerous and all this nonsense. But if you start to take, you know, if the state starts to demand tax in Bitcoin, then I think that's the real sign, I guess, when you're gonna. That's when we're getting very close to this point. But I think for the next year, it's going to be nothing different than what it has been for the last 15 years, which is the 4-year bull. Yeah, every top has been more damp, more soft than the last. I expect that again here, but I do expect the top. Yeah. Sloan is talking about corporate treasuries being the driver this year. And it will be. You know, Saylor was well ahead of his time. He came in about here. He was making his announcement this summer, somewhere here. And he was buying sub 10K. Which was 5 years ahead of his time. So now that's coming, and I think these bands hold. I would be surprised if the price doesn't hit this. If it doesn't hit it, then we're I don't know. I see it growing this way. I see it growing along this trend, and I see the top. I see these tops still occurring. The market just gets too aggressive. It gets too overheated. People maybe think the Bitcoinization is coming, and then markets always throw us for a U-turn. A lot of uncertainty, though. A lot of geopolitical uncertainty. Roman says, saw a great YouTube video from a guy who was talking about his 87-year-old grandma about Bitcoin, trying to put it in physical, analogous terms she could understand. It's important to educate in accessible ways. Yeah, completely agree. Bitcoin is just the best asset in the world. I mean, you can hold it just like gold, you know, have a keys in the vault just like gold, but it can even be better than that. You know, it could be in your mind, or it can be, part of it can be in a bank vault, which is also kind of similar like gold, but part of it can be there, part of it can be a multi-sig, part of it could be online, depending on how savvy you are. I wouldn't recommend that, putting your keys online, but in a password manager or something. I'm just saying these things could, there's no end to the creativity you can have of holding Bitcoin, but if you just take a little bit of time to educate people, yeah, there are plenty of ways to do it. And I really would try to do it on your own. I really do recommend that. There are lots of services that can help, but holding your keys in some way, shape, or form is the way to go. Solanitz asked about the drawdowns, if they could be less this year. I don't think so. If you think about the timing, I expect some monkey business, lots of monkey business to come out about the Trump family still. I mean, they're just immune. I mean, it's like Teflon, obviously, as we know. They seem to just be the one family that's somehow immune to any blowback. But, um, you know, a year from now, midterm campaigning will be in full swing. Again, I'm not even saying they're doing anything wrong, but the grift is so clear, obviously, with the jet and everything. When it comes to their people buying their coin, people investing into their World Liberty Financial scheme. I'm sure you guys saw the thing about the what was it, 500,000 to meet with him. 500,000 in his coin. The more you have, the more chance you get to meet with him. All that stuff is clearly violation of law, and it's going to have to be hammered out. That will hurt the market. I'm not saying Trump is singularly in charge of that, but to me, that's a good possibility of a major drawdown, like SBF style, which happened right here in 2022. It just, all these things just naturally coincide, right? I mean, everybody thought, SBF was running a viable enterprise when he didn't even have any Bitcoin. He did have a virtual reality, or was it an AI or virtual reality investment, which happened to be pretty good. I think it was virtual reality. Anyway, I do think the pendulum will keep swinging. I would have no problem if it stayed on the power curve. I don't see it. And as for your point about the treasuries, it would take a bit. I mean, look, we just had a huge drop in the ETFs because of BlackRock here. You can't even see it. Hold on. You see the dip right here. 500,000. Here we go. 1,000,003 to 800,000. IBIT doing huge amounts of redemptions or liquidations, I guess. And the price hasn't moved. So I don't think the ETFs will affect it much at all. I think it's probably going to be just scams, traditional scams that will blow out the market. I hope there's not too many, but if you think about it, the stock market has plenty of scams too, and prices can really react from that. So just the analogy is Bitcoin price does react in the short term. And I just don't see any reason why it would change. It would be beautiful. It just stayed like really close to this trend, but I don't see it. But I do think, as far as like a portfolio strategy or managing, your family's wealth, I think that, again, not financial advice, but if you're going to, enjoy some of these times where your trailing 12-month return is pretty huge, right? 100%, 200% compared to anything else in the market. And of course, plenty of stocks can return that. But this is a major asset that has trillion, you don't have to go into the penny stock world to get this return. This is a major $2 trillion asset. Now, yes, I don't see 1,000% return for Bitcoin. I just don't see it. There's plenty of people that believe it's going to happen. Plenty of percent of people that think we're going back to hyper Bitcoinization or whatever that means. No, I think you're just going to get more damp, lower returns. So here it was, actually we didn't even get, no, wait. Yeah, last cycle, we got 1,000% still. We did. I think it's totally fine here that we can get in this cycle. We're building up to it now. We can get to say 300%, but then we still go negative. So here we still went down to 80%, didn't we? I'm negative now, so I'm below zero. Let's just look at the tooltip. $70. We didn't hit 80. At the worst of it, we hit 74. 75. This was probably the darkest of days right there. I can't remember when the SBF news broke. It was around this time. 75% drawdown. And people panic. People panic. They sell. They panic buy and they panic sell. Yeah. Totally possible. I mean, none of this makes sense, as we talked about. And any of these NGU values you can get on your own by just holding Bitcoin. So I don't see it. Yeah, it's true. You could get like 40x when really they only got. Block has this. Interesting. They're only 3.4 on their Bitcoin, but they're now 40 times on their company value. But of course, they have other value. They're doing other things, providing services. All right, guys. I think that's it for me. I'm back. Thank you for joining. Let me know. Drop some more comments if you want to see any other charts. I got some other ones, interesting ones I'm thinking about as we're getting to the silly season again. Thank you, Slán. It's Roman, Kevin, Tom. I'm good to see you guys, and let's talk soon. Have a good day. Have a good Monday. Have a good week.